This is what you've been waiting for with Tony Dwyer. What he desires is an oversold market and/or a market that drives ever higher, an ever greater volume. He has not received any of these gifts. We churn into April. Mr. Dwyer's board stiff as equity strategist at Canaccord Genuity. What's going to get this market going?
You really need a reason in a fundamentally driven market, which is what we explained earlier. When low inflation equals easy Fed equals steep yield curve, you're ultimately not going into recession. The market doesn't historically peak until you're 8 months prior to recession. If I could make the case that we're multiple years away from, just based on historical precedent, from that. So the bottom line is you need a reason to expect the launch of a next leg higher. There's one of two things that do that. You either get a huge volume move to the upside where everybody thinks they're missing it, or a deeply oversold
But every
market.
CEO, every CFO is under pressure to deploy cash. They're, if we assume, going to continue to go through that exercise at some level. Does that support the market, not into correction, or can that lift the market?
I don't know if I understand.
If they do use of cash, is it going to support the market?
It supports the market.
Or is it going to lift the market? That's a real distinction in psychology.
It supports the market. The reason to be bullish here, you could come up with a lot of great academic stuff. It's math. If you're a pension fund and you need to make 7.5% to pay your benefits, and your highest yielding form of fixed income is yielding 5.5% to 6%, you statistically can't get there.
Yeah.
So when you have that driving, also you have CEOs doing buybacks to a record degree because of the corporate credit new issuance, and they're offering more money for dividends. It's a very constructive.
But critically, I didn't get the answer I want. Does that sustain us, or does that lift us?
I think it sustains us right now. What really lifts us is the feeling that if you don't get in, you're going to miss it.
You know what? We should put a bookmark in that comment right there. Statistically can't get there. That is the future of American pension conversations. It's the future of politics around that. But I'm gonna do a little test. I want to see how much of a socialist you are.
I was the president of the Western Civilization Society in college. I'm not a good socialist.
When we see wages actually rise, there's a hint of wage pressure now. We're going to see a spike in GDP as well?
You should see, I don't know, I think you're going to see a strong rebound of GDP in the second half, which again is why I don't think you're going to go into 2016 before you get the first.
Is that in the market? Is a better GDP?
No, I don't think so.
The president loves to use the word better. Is better in the market? I don't think it is.
Well, part of the problem with the market is that portfolio managers, institutional portfolio managers, are now judged weekly, not even monthly or quarterly.
Really?
It makes it very difficult. Every portfolio manager has this statement in their public statement that they're long-term investors. The problem is it's hard to be a long-term investor when your biggest shareholders or your biggest clients are demanding daily returns or monthly returns. So it makes it for a very difficult, it's almost like a duration discrepancy.
Two sectors to buy right now. Which ones?
Anything to do with the millennials, I think, you're going to accelerate the number of people turning 30. I created a household when I turned 30. I don't know about you guys when you did it originally. But so what do you want to buy? Well, if you create a household, you got to get money to buy the household. So you want to buy the banks, so it's financials. And you got to buy stuff to put in the house, right? So that is consumer discretionary. And I would throw information technology in there because everything we do in putting stuff into the house has to do with technology.
To answer your question, it happened like a thunderclap. When I was 30 years old, I lived alone. When I was 32 years old, I had twin girls, literally a white picket fence, a dog, a house, and a wife.
And you were 4. Okay, so at 24, the last thing in the world I was looking for was to create a household. I was on the Upper East Side having a ball, right, and starting my career.
This is in 12 years. This is the most depressing conversation I've
it's the most exciting because think about it. When did you create your first household, Tom? I didn't say year. I said at what age.
Oh, at what age? 30-ish.
All right, 30-ish. Yeah. That's what happens. So you're going to accelerate the number of people turning 30 to the same degree you did with the baby boomers over the next 6 years.